You have your poster. I mean, you don't have to have a whole gun. It has a hip poster.
I know I was there.
So there's been a bit.
Mhm.
You have to carry it at public safety.
I got my water, but thank you. Never leave home without it. Look at you.
He loves.
Well, let's.
Or either that or he wants me off his back. Hey, is Jason coming today?
Yes.
Good answer.
Yeah.
Who's, verification.
Yes, I know.
His wife answered the phone as he's like, Jason Kern's answering service, please stand by.
Really?
Sure, I'll put one of those over here. Yeah, you, Pauline, you got one?
Yes.
That is what you call a substandard Diet Coke. They didn't get enough syrup in it. Tastes like carbonated water.
Oh, I'm sorry.
No, I'm not complaining to you. Oh, that may also be the fact that it's expired on August 11th, 25. They go bad pretty quickly.
Did you want water?
What
I got
about-
water, but thank you.
Thanks, man, I'm good.
Well, maybe a water. Is that up there? I'll get.
Yeah, you've been next to one.
It's a little light when it's like it's supposed to be. I'm sorry. Oh, how are you supposed to know? You bought it? And I appreciate the thought, so I'm not complaining.
Good evening, Mayor.
Hi, how are you today?
Oh, we have barely a quorum. Where's Viv? She's not on vacation. Hey, chief.
Hey. Forgot about this one.
You can come on up. Hey, do you have any idea how to turn the lights on up here?
I asked Brad and Brad said he tried figuring it out and he couldn't.
Oh, okay,
get it to
never mind.
work.
That is so fun. I think that's it.
See, Dave's pretty wise, he's keeping his distance in case anyone asks for money.
We could put some chairs up on the stage and let people who are regularly here come up to the stage. There's one right there for you, ma'am.
I feel like I should be wearing tights and holding a skull.
I know, right? To be or not to be.
I'm gonna ask for permissions to go.
Which one?
See.
Oh, okay.
Here. Oh, great. Eric, can you say the will for those comes?
Okay.
As long as when you take the podium, you give it back.
I will, I will.
School can't afford to buy another podium.
No. And what you need to do.
Hey.
Yeah,
Good.
slowly, slowly on the mend.
You got us under the fire. That's important.
I know, you feel like I'm being interrogated. you know?
People still feel better and overdue,
Mhm.
and they re-injure.
Yeah.
So
He's, his big thing is he wants to be able to get off the pavements as soon as possible.
That's the only one.
Tell him if he has any extra.
It's one of those where they make you swear that you're
Did
not.
anybody
gonna
make
sell
the
them,
EAR
give
meeting
them
on
to
Saturday?
kids.
It did, the flyer didn't have a time.
Oh,
about this review?
it was 3 o'clock.
Oh,
was it one?
That's what, I just checked my email. Yeah.
You handing out candy to everybody now? I thought that was just mine.
Here, if Viv doesn't like candy, you can have her.
Just. No, you're not. You're Mr. Diabetic.
You're
Diabetic.
I come get mine in the morning, cause that's when I like my sweets.
Yeah, I was gonna say, okay, I've got some insulin in there.
You know.
I'm sorry, I just want to hold
Oh,
back.
there's all those cars out there. I was like,
We don't.
School board.
Yeah.
Right now.
oh, yeah.
The school board should be under the lights, not us.
What was that? How often?
It's in.
They do- Yeah.
Water map.
Yeah, I saw it.
Okay,
This is.
It's as common as Albion's old city map.
okay,
Encountered it.
okay, I wasn't sure.
And in fact, when I went looking for it, it was already sold.
Oh, really?
Yeah.
Oh.
I was intrigued because it would be cool.
Yeah, but I'm sure you guys must have, or,
I think we have at least one, but our auction's coming up Saturday. And those historic sorts of things do pretty well, so.
you gotta do questions, sure.
All right. Get the show on the road.
Little charter.
I'm sorry. What was that? You suppose that's too close now that I've moved the tables?
The owl, like too close to us.
It's okay? Okay. Yep. Okay.
All right, folks, I will go ahead and call our study session to order. It is 6:30 PM. If we can start with the Pledge of Allegiance. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. City Clerk Domingo, if you will take roll call for us, please.
Councilmember Logan.
Present.
Reed. Stewart.
Here.
Ross.
Here.
Davis. Here. Burns.
Here,
And Mayor Sewell.
Here,
making a grand entrance.
our study session is to discuss items that are going to require action at our regular council meeting. First, we are going to be asked to approve resolution 2025-17 to approve the commercial facilities exemption after a public hearing. Attorney Harkness, do you want to give us some information on this?
Yeah, so this, we discussed it, well, as council's aware, we previously set up a commercial facilities district. This is separate. This is the business actually applying for the exemption. It's important to note that the exemption applies to the building and its contents, not the land. So the land will continue to be taxed based on its taxable value. They're asking for a 12-year exemption.
It's 10 years under the act.
Their application is 12, so I'm pretty sure the statute is 12.
Let's see, the certificate must be issued for a period of at least 1 year. You cannot exceed 10 years.
Yet the form says, well.
I think that might be outdated.
Okay.
In any event, while I'm checking on that, basically during the exemption period, the building and its contents are not taxed. And then at the end of the exemption period, it gets taxed on both the land and the building. The business owner is projected to invest $750,000 in improvements into the building. And that renovation is scheduled to be complete, I believe, by March of 26.
Do we have any questions for Attorney Harkness?
I do.
Yeah, Councilman Williams?
All right. Just to go back over what you just said, they're applying for the tax exemption for the business,
So it's the building.
the building,
It's a building and its contents. So basically,
where they'll be making the improvements.
correct.
Okay, and then the land will be paying taxes.
Basically what they're being taxed now for the land is what they're gonna be taxed on during the exemption period.
Right,
But what they do to the building does not get taxed.
gotcha.
So like, obviously, if, when you make $750,000 of improvements, the taxable value would go up exponentially, but it's basically frozen during the exemption period.
So in the resolution itself, I don't see where it said a specific amount of years.
Front page of the application.
Page 9.
Okay. And that in the resolution.
A third of the way down on the right side, number of years of exemption requested 12.
But you're saying that it
Doug,
can't.
no, so that form is outdated. I'm looking at the current statute.
Okay.
It says at least one, not to exceed 12.
Okay.
Okay,
Which is standard.
yeah, I was going to add, 12 years is a long time.
It's a standard
I mean,
in most economic development, both industrial and commercial. 12 years is a standard.
And that's what Ace Investments or whoever been doing all their projects.
Have been 12 years.
Was there, yeah. Councilor Stewart.
As far as I think I'm hearing that it's also on the content, so it's the improvements in the buildings, the value of the building, which will be taxed and increased, will be tabled essentially for 12 years. But also the contents, so the personal property, like I would have in the bookstore. This is the personal property, that's all the equipment and that sort of thing inside the building will also be in.
Yeah, so think of it this way, what they're being taxed right now is basically to be frozen for 12 years. And they'll pay that amount. And then once the 12 years expires, they get taxed on. Basically, the property will be reassessed and they'll be taxed on the land and the building with the improvements and.
And yeah, Councilman.
Excuse me, did you say up to 12 years or? until-
12 years is the maximum. It has to be at least 1 year. It could be.
Our decision as to whether we approve 12 or
Is
not.
it? But he said up to.
Well, that's the statute says.
Yeah.
Any other questions or comments? All right, next, we're gonna be asked to approve resolution 2025-16 to exempt the city of Albion from the requirements of the Michigan publicly held health insurance contributions. Go ahead.
So this is our annual insurance opt-out. I took the liberty of preparing a resolution. This is the exact same resolution that the city votes on every year, just with updated numbers from the Michigan Department of Treasury. They set the numbers under the statute. In this, basically, if you're not going to follow the state's 80-20 plan, where the employer pays 80% of the healthcare costs and the employee pays 20, you have to opt out. The city opts out because we pay 90% and the employees only pay 10%. So we actually provide a better option for the employees than the state requires. So that's why we're doing the annual opt-out. But it's the same resolution that we voted on every year since the act took effect in 2012. The only thing that has changed is it's for 2026 year, and the numbers have been updated based on the amounts published by the Department of Treasury.
Any questions? All right, next, we're gonna be asked to approve resolution 2025-18, the deficit elimination plan. City manager?
Yes. Madam Mayor, members of council, David, do you want to address this? Go ahead.
Hello, everybody. Thank you, Mayor.
Or not, one of those microphones on, just push them out and so. Yeah.
So this resolution relates to our 2024 audit report for our internal service fund, which is our equipment fund. And I received a letter from the state noticing or suggesting that based on how audit was put together on the balance sheet on the audit report, that it showed an unrestricted deficit in the fund balance. And that a deficit elimination plan should be done based on the numbers that were presented by the auditor. So when I got the letter, I noticed that it was a final notice. So I wasn't sure what it was talking about. The first that I heard of it, and I don't have a record of receiving the initial letter. I think it was sent to Jill, and then she sent it to me on the second notice. So I called the person that sent me the email. His name is Jeffrey Schwartz. Very nice guy. I spoke with him. He's with the Department of Treasury. And he's told me that he was taken over for somebody else. And it was possible that I didn't get the first letter sent to me by email. But what this is in 2024, we had quite a bit of activity in our equipment fund. And it was because when Jason took over, he went out to the equipment fund, or the street building, and he noticed a lot of equipment that was out of date, wasn't working right. He noticed the building was not in good shape. So we had a lot of activity in our equipment fund. I think I sent a handout. So I'm gonna come back to the plan here in a minute. I wanna show you how we got to that point. So the first handout that I gave was the balance sheet. I reproduced the balance sheet. And it's this handout right here that she gave, or that Jill passed out.
I didn't get.
So when you look at the balance sheet,
Yeah.
it's this one right here. But what was printed out just didn't come out right, so I'll go ahead and print it myself, and it's a little bit easier to read. But what this is this is the balance sheet at the end of 12/31/24. And of course, it has current assets, non-current assets, current liabilities, non-current liabilities, basically. It's asset balance sheet. Current assets would be cash, receivables, inventories, prepaids. But the way they calculate it is they take the current assets, which I highlighted, and subtract current liabilities, which I also highlighted, and the 600 and, if we see this, 625,496 deficit is how they come up to that figure. So they take the current assets, subtract the current liabilities, and they show that as a unrestricted deficit in the fund balance. Even though the fund balance is positive at 558.
56?
I can't really read.
556, 890.
Yeah. Part of the fund balance has to be separated and called unrestricted. It's just an accounting term, basically. So the question is, how did we arrive at that? If you take the next handout that I sent out, this is a recreation of all the capital expenditure that we purchased in 2024. We start with land improvements. We did some improvements to the building. These are all capital expenditures, things that would be set up and depreciated over time. And then, of course, if you go to the next page, we had quite a bit of equipment. Everything in yellow is for 2024. We had quite a bit of equipment, $807,000 of equipment that was purchased. This doesn't relate to vehicles. And then we also had improvements to some of the equipment that we had. And that was 263,000 and some change. So the total assets that we bought in that fund were 1.2 million plus. That's very uncommon in 1 year for an equipment fund. And so the question was, how are we to pay for that? So we came to council 2 or 3 times when Jason came to my office and suggested that he would like to purchase certain pieces of equipment. And council approved some transfers from other funds that would fund the 1.2 million in expenditures. And then we also decided to loan the equipment fund some money from other funds. So when you take the total of 1.2 and some change and subtract the transfers and the actual loans from other funds, that's how we came up. We were able to purchase all that without going into debt with third parties. The difference was about 34,000, which came out of cash. So on the balance sheet, if you go back to the balance sheet, there's $600,000 of loans that are owed from the equipment fund back to the other funds. The state shows that as a current asset, or excuse me, current liability. When we set this up, my thinking was, hey, maybe over time, the equipment fund will get back on its feet, we'll pay that money back, and now make it a permanent transfer. But the state shows that as the current liability. And so when you subtract that to the current assets, that's how you come up with the unrestricted negative fund balance. So the state requires that you submit a plan to eliminate that over 5 years. I came up with a plan that will eliminate it in 3 years. And the key to it, and I can go through the plan step by step, if you want me to, but the key is we're able to subtract out the depreciation. So when we buy the equipment up front, we spend 1.2 million and then we depreciate it over time. It's a non-cash expense because we've already paid for the 1.2 million in assets, but we write them off over time. So every year we get to, on this plan, which the state allows us to do, is subtract out the depreciation, which is a non-cash expense. And over time, that will eliminate the deficit that they're talking about. I know it's kind of confusing, but it's like, and it's basically an accounting thing that they allow us to do. So when I talked to Jeff, he said, go ahead and make, come up with your plan, deliver it back to me by email, which I did. He made some comments, told me to expand my explanations a little bit better. And those are at the bottom of the resolution. And he would approve it, so when council does approve it, we wouldn't have to go back and forth. That what we send him will be approved by the state. So I sent him 2 separate plans, and the last one was this one, and he approved it, and he said, no, it just had to be approved by council. And then once it's approved, we send it to council, or excuse me, we send it to the state, and then they will approve it. And every year we have to re-look at it and submit a new plan to show how everything is going.
David, for council's information and for the public's, would you just take 15 seconds and explain about the revenue generated by the equipment rental rates?
Yeah. So our equipment fund, of course, buys most of the equipment. And then each month we charge rent for the equipment being used at different funds for different things. So that's how the equipment fund gets its revenue. By charging the other funds rent based on the equipment that's being used monthly. They also get revenue from rental of the building, the street building. And they also get revenue if they sell assets at a gain. So when we replace our equipment, we try to sell the old equipment and pick up capital gains, gains on fixed assets. So those are the 3 revenue streams: rent for the equipment, rent for the building, fixed asset sales, and interest on our investments if we have one. Now, the equipment fund is not a fund that carries a lot of cash. It's really there to basically break even or make a little bit of a profit. So again, in 2024, there was an exceptional amount of activity that went through the equipment fund. And that's why we ended up in a deficit. Now, I very well could have said, okay, let's take the 600,000 and not call it loans from other funds and make the transfer permanently And then we wouldn't have had this situation. But my thinking was over time, I think the equipment fund, once Jason would get it in line. And it wouldn't be so expensive from year to year that it would be able to pay those loans back. And it very well could, as time goes on, depending on how much the equipment fund spends each year based on what it's getting in. I know it's kind of confusing, but it's a bunch of accounting. So this is a resolution that's required to be approved by council, so that the state know that we're aware of it and that we have a plan to eliminate it over time.
City manager, any additional comments?
Yes, there are, ways that we depreciate equipment, different equipment. So when we buy a dump truck, it usually lasts us approximately 15 to 20 years, depending on how it's worn. What will happen over time? Say a dump truck costs $250,000 with all of its attachments. What will end up happening is it will last for maybe 15 years, 20 years, but we depreciate it at a quicker rate. Thus, the equipment is paying for itself in a faster time. So again, this is accounting. It's a requirement. A deficit elimination plan is required by the Michigan Department of Treasury for any fund that you might, and I've experienced this in other cities. You take a fund that has $1 million in it, but it only takes in on an annual basis, maybe $500,000, but you spend $600,000 in one fiscal year. So again, that would be an example of a deficit and would require a deficit elimination plan. So as Dave had explained, we have an explanation for this. I don't want council to worry that our funds are being mismanaged. They're not. This is a requirement in the accounting world, and Dave and Jason do an excellent job of keeping track of this equipment.
Yeah, I think the way to look at it is in year 2024, there was a lot of activity that was unusual for the equipment fund because it was in such bad shape when Jason took it over. Not only the building, but the equipment that was out there. And that's why we came to council and Jason said, hey, let's get stuff in line. Let's buy what we need. Yes, it's gonna cost a lot of money. We'll try to get the other funds to help out. But my thinking was, hey, let's make half of it permanent transfers and let's let the other half be alone with the understanding that maybe the equipment fund, after it gets in line and gets back on its feet, can possibly pay that back, maybe not the next year or the year after, but eventually. And that's why when the state said, hey, we have to show that as a current liability instead of a long-term liability, that's what caused the unrestricted deficit.
Do we have any questions for either Director Clark or City Manager?
So to agree on this, we voted.
What was that? I'm sorry, Councilwoman Reed?
I just said to approve this when we voted, yeah.
Yes.
Yes.
Yes. Any other questions or comments?
Just like to say very thank you. And Jason for what you do, because I talk a lot with the guys and they're very good.
Thank you. Yeah, again, I just want to emphasize that this is not a, 2024 for the equipment fund was not a normal year. I took a look at the last couple of years before Jason got there and the expenses were a lot lower. So I'm hoping that eventually we can get to that point again. And we will not run into this because it's all based on if we have to buy equipment all in 1 year, a heavy amount. But hopefully going forward, this should not happen.
Councilman Stewart?
This is just a general question. It's a soft criticism. But I was trying to review this and I didn't know what I was looking at. So I would have, I would like, if we can, to have some summary of what you told us tonight. Going in so that I can, I looked it over, but I didn't feel like there was a lot of value in me looking over because I didn't know.
It's a little complicated. this plan is not easy to put together. And it's, when you first look at it, it's very complicated, but if you look at the plan and you go to the bottom section of it, that's where it summarizes. Right before the explanations. And then each one of my assumptions are explained in the instrument. But I probably could have put like a sum together for it, and I'll keep that one.
And your verbal explanation is great, so I'm walking away comfortable, but I would feel better if I could review it before the end and have questions asked, that sort.
Okay.
Any other questions or comments?
Thank you, David.
Thank
You're
you.
welcome.
So real quick, we can discuss the agreement with the city and Safebuilt.
Yes, Madam Mayor, members of council, we have a proposed agreement. We will be discussing that at a regular council meeting for additional services regarding Safe Build. I can go into much greater detail at meeting time, but what this is this is a proposal to give us additional services of inspection and also code enforcement. That's what and I'll explain in greater detail at our meeting.
So seeing no public. Do I have a motion to adjourn?
So moved.
Support. All in favor, say aye.
Aye.
Opposed. Study session adjourned 6:56. Be back at 7.